Yes, hello, good morning. Hello, Seaweed. Yeah, Lynch, hello. Yeah, so yesterday I wasn't able to do the live, you know. But yes, so we'll have the continuation today, and that's gonna be on the part two of our candlestick lesson. Yeah, so did you, hopefully, you did the exercise that I asked you guys to do? Just watch how especially for the beginners. Watch the candlesticks, how it opens, how it closes, just to indicate the ending and then the starting of a session. All right, so uh-huh. Yeah, so let me try to share my screen from here. So for today, we're gonna be talking about the candlestick patterns and my personal favorite candlesticks in the market. So let me share my screen from here. Calculator. Mhm. Yeah, so this one right here, guys. Okay. So if you can see, there is three category. We have the bullish, neutral, and then the bearish. Yeah. So let's talk about first of this candlestick right here. Yeah, let's talk about the bullish one first. Now, if you guys can see this candlestick right here, yeah. I'm not quite sure if you guys can see my cursor. Please let me know, okay? If you guys can see my cursor. So right here is what they call again hammer. So we have discussed that in the last session. So looks like this. Yeah, we have the body and then a wick, a long wick. So in a hammer, in order for it to, be considered a hammer, the wick should be at least, okay, let me do this. All right. So, yeah, so it should be twice the length or more than the length of the body. All right. So just a moment. Yeah, so as I was saying, so we have hammer or pin bar. So the weight of that should be at least longer, okay, longer or like 1.5 of the length of your body. So if I'll remove that, looks something like this. So going back again, we got the hammer, so it looks like that. So the longer the wick, okay, um the ideal it is for us to you know consider that, because imagine this. Okay, now let's talk about psychology. Remember, we got the opening. So if this is a bearish one, we get the opening right here and then the closing of the session right there. But during this session, what happened? Sellers tries to go down, but then buyers, can you see, they had the um they had the strength, guys, to push the price higher. Yeah, they defended the price dropping and even, push it back all the way up. Yes. So, um, yeah, so the next one is right, this one, inverted hammer. So now you'll be like asking, hmm, shouldn't that be a bearish candlestick, miss? Right? Like, why does it belong on a bullish section? But yes, you're right. Yeah, this formation is bearish, which is around here. Can you see this one? It is bearish. Now you're seeing a hanging man right here that was a bullish earlier. Okay, this one right here. So they will fall under a context. Okay, you need context, which we will talk about later. So inverted hammer, going back. So hammer earlier, the standard, this one is bullish. Now we have the inverted hammer under the bullish section. So if you guys can see, all right, we have a candles going down, down, down. So this one right here indicates that the market is from a downward section. Okay, or yeah, in a downward movement. So right here, if you'll see, we are moving on a down. Okay, let me put a, okay, let's like this. So now we are currently in a downtrend, yes. But then, let's take that this one is a pin bar. There you go. We got the pin bar right here. Can you see? So first, what is this one? Okay, a downtrend, and then we have a bullish candlestick. Okay, which is the pin bar. So what happens is this: when you get, you know, opposite um, movement from the trend, which is right here, the bullish candlestick, does it mean, oh, is it gonna reverse, miss? Just because, again, it's bullish. So can I like take like position to the outside like that? Not yet. Okay. Remember the market structure lesson that I told you. Unless and until, we are in a downtrend, the the trade that you should be looking at, okay, the more favor the market is gonna go is gonna be with the uptrend. So yeah, uptrend if it is in an uptrend position. But currently we are in a downtrend. So what does this one means? So it means that there's a possibility only of weakness. It doesn't mean that it's gonna reverse yet. Okay, not yet. So what about this one, miss? Yeah, that one is a bearish one. That was the inverted now, guys. Okay, the inverted candles, the inverted hammer, but they play the same role. So the context now right here is this. Let me add. If it is against a support, okay, so let's say that there's a support. You have seen me do lives, correct, every night, and you'll see me break down some trades, support, resistance, everything like that. So if you see a bearish, supposedly this one is a bearish hammer, right? But if it is against a support, okay, that turns it into bullish. Okay, so those are some rules with the pin bar. So yeah, this one makes it bullish. So again, it doesn't mean that it's gonna, go up, shoot to the sky like that. It will just like tell you there is a weakness. So market can literally halt from here, do like this, do like that, at this point, yeah, not falling more down. There is weakness. Okay, so right here, the dragonfly doji, if you can see, it's similar with the hammer. The context is similar. It's just that the dragonfly doji looks something like this: a very small to almost no body at all, okay, and a long wick like this. All right. So the next one is a spinning, bullish spinning top. So this one, I do not consider this as a bullish. That's me personally. What we're looking at right now is by theory, and yeah, I'm just sharing to you that this one, this is more, yeah, I can say like neutral or like a reversal type of candlestick. So these three, take note of this. Okay, they are pretty useful when you want to do a price action with candlestick. So with the bearish now, similarly, this is the standard bearish candle pin bar. But this one, oh, right here pala. And this one is the inverted. I know, ignore the names, guys. Okay. So let me share on the chart na lang right here. So the standard bearish pin bar looks like this. Okay? And then the standard bullish pin bar looks like this. Yan. But the inverted, again, this one, this area that you're seeing is the, let's say, the bullish candlestick. This one is the inverted. And then if we put now the inverted bearish, looks like this. Okay? So this two, I hope you don't get confused. Okay, so just go over this lesson again. So, just review it. But yeah, this is the standard. This is the inverted for bearish. So, again, similarly with the bullishness or the bullish pin bar, we need context. So, let's say now, in order for this one, how to use this, let's say we are coming from an uptrend, okay? Uptrend like that. And then suddenly we can see these guys right here. It doesn't matter if it is like looking like the standard, okay, the standard one, okay, that's bearish. But if you see like this, I want you to see if there's a possible rejection, yeah, or yeah, resistance zone up in there, in order for us to double check that pin bar. Again, when you use your candlesticks, guys, you need context. Okay, context. So it's just not the like this one. Oh, it says in here it is, it is bullish. So when I see this in the market, I'll trade bullish. No, you need context. Okay, remember that. So similarly, mhm, right around here. Yes. So the context with this one is we are in an uptrend, but miss, does it mean that it's gonna go down now? Not yet, unless and until we got the downtrend uh, shift of cycle. All right, and then we can use this one. So where's this one? Yeah, now let's talk about the neutral, and then yeah, or like resistance. And right here, we have the spinning top. So similarly, bearish and bullish will have that bearish spinning top, bullish spinning top. So it serves the same purpose of the hanging man, or like the hammer, wherein like market has the 60 to 70% chance that it's gonna stop in there, especially if you are facing a resistance or a support. All right. So it doesn't matter if it's a spinning top formation or a doji formation. These two, these two, they show up a lot in the market. Harami, not so much. Marubuzo, not so much. Rarely, I can say. But it's good to know. So keep this in mind. This is very small lang, to be honest, because if you think there are like hundreds of candlesticks pattern out there in the market. So what I'm just sharing to you is what I personally use. Okay, all of this, and what's the word for that? Yeah, now something that is you can see talaga, you can see in the market every day, okay? Or like when you trade. So this one was a single candle pattern, right? Isa lang, one. But right here we have the double candle patterns. Right here, um, we have the bullish kicker. So why is it a kicker? If you can see, we have the opening, the closing. Okay, opening, closing. This is a bearish, and then followed by that is a bullish candle. And if we close the session right here, supposedly, if you have watched the session now, the practice that the exercise that I asked you to do, supposedly the next candle should open right at where the closing closed. You remember? But closed right here, where did it open? Right above there. It's like someone kicked the the opening and up in here. So that right there is an influx of what? that just shows a bullish trend, you know, um yeah, pressure to the upside. So bullish kicker. So that is the important thing, guys. We don't just like see the candlesticks like this, like memory, what do you call it, memorize them by picture, and when you see it in the market, oh, that's bullish, oh, that's bearish. I want you to know, as always, why the psychology, why. That's the important thing in trading. So right here, the bullish engulfing, we have the opening, the closing, and then we got the opening, yes, down in here. But can you imagine, or like, can you like see now how strong did we push to the upside? Like, the word from here is engulfing, meaning it eats up the previous candle, and it did. Can you see the length of it? Yeah, so that shows, bullishness. That shows um buying pressure. So similarly with this one, pricing line, this I do not use this one. Okay. So this one is a bullish harami. Sometimes they call it like a pregnant candle. I do not use this one. Okay. So but it's a good to know. If you guys want to learn more about that, you can, explore the market with it. Tweezer bottom, it's somewhat like similar. If you combine the two of them, we get the opening, the closing, the opening, the closing. So if you'll combine two of them, they will be, for example, if this is a 30 minute in a 1 hour candle, it will look like a solid, okay, a solid, um what do you call this, if this is the 1 hour, 8 a.m. right now, opening to the downside, and then 9 a.m. close around here. Now, if you combine it, they will look like a hammer. So how does that work, means, right? So let me show you right here. Okay, opening right around this area, and then like that. By the way, this is bullish. So remember, where did it open? Of the If we'll combine the two now. Okay, so we got the opening at this session right here. So let's draw that, right? 8 a.m. Now we go down. If this two is 30 minutes each. So go down all the way till here. Okay, go down all the way till here. On the 30 minute, now it closed around here, but this is 1 hour. Still not close. So 1 hour, now next candle on the 30 minute, and then right around here, this is where we close. So from this bottom, we went up and go down. Can you see? Now, if I'll put that, this is the opening again. That is the closing right here. Remember, this is the opening of this bullish session, and that right there is the closing. So I'm just taking. Now, the length of the wick, there you go. What does it look like to you guys? Pin bar. Yeah, that's a pin bar. So going back on the candle, yeah, so that's a tweezer bottom for you. So all of them, if you'll combine them, they will, have a formation of the single candle pattern. So have a good exercise with that. Practice it. Check it yourself. Okay, and then let me know. So right here, similarly with the engulfing, so if you'll combine engulfing also, it has that pin bar look also. Opening right here, closing around here. If you combine the two candlestick, yeah. But yeah, engulfing, um, yeah, the psychology, we get the opening down in here, closing, and yeah, supposedly, oh, it looks bullish, but then the next candle engulfed the previous candle. So all of this, guys, needs context. We don't go over the chart and then like see this pattern. Oh, that's a tweezer top. That's bearish. Ganyan. No, we need context. All right. So with the triple candle pattern, what I would like you to take note, okay, is the morning star. The three soldier, it happens especially in the daily, um, which follows by that is a strong uptrend movement. Morning star is more of a reversal. Okay, so if you want to use a morning star, so it should be appropriately used with a correction formation or against a resistance or no, against a support. Okay, so like this one earlier. Okay, so we need a support. Hmm. Yeah, going up, correction. So this is where that morning star we should be seeing that. Okay, so right here, going back, bullish sandwich. This I do not use it. It's too much. For me, rising candle. Not so much, depends. As long as the candlesticks, the bearish candlesticks in here looks small with like no bearish momentum happening, then yeah, you can expect, especially if it's followed by a bullish candle to that, like literally eat up like this one did not happen. So morning star, this one is the morning doji star, they have similar. Okay, abandoned baby, we can literally see the going down, but then at the same time we got the pressure to the upside. All right, so similar with the bearish right here, three black crows or three consecutive strong bearish candlesticks. Expect the market to slide down. Okay, so we have the evening star right here. It's just the similar of the morning doji star. So again, you do not use this alone. It needs to have context. So if it is a evening doji star, ideally it should be against a resistance. So evening star, yeah, they both of them. Ito, evening, abandoned baby, evening star, they need context. Okay, similarly to the doji star. All right, so um, let me open the Bitcoin chart right here. Okay, so let's just do a quick what do I call this? This is the 2020. Now let's have the combination of the market structure and now the candlesticks. All right, like how you use it. Open the 3 day. All right. Now let's go back on the daily. Okay, so now we have the movement to the upside. If I'll zoom out, okay, we are in a bullish market or in an option market. So we have the impulse more to the upside from here, impulse, impulse. Now we're getting some small pullback correction, continued by a strong impulse to the upside. So we know that, oh, the momentum is really strong to the upside. So if you want to take, if you want to partake the or what do you call that one? Trend trading. So now we are getting some correction. Can you see? Oh, that's a proper correction. If you open the line, you can see that. Yes. So in a candlestick, if we got the first rejection and then the bounce right here, okay, I'll show you. Impulse, bounce, there. So in the future, we can refer to this one, for a possible entry or bounce. So moving down, can you see? Now, this is where you should be getting interested at. When the market stops, continuing down, and then you can see now those spinning tops, the inverted bearish pin bar, which is around this right here, making it a bullish. Okay, it's a bullish inverted pin bar now. Yeah, it is. Why? It is against a support right here. So what happens next to that? All right, so we have some engulfing, looking like an engulfing. We have some pin bar. So ideally, now the market is telling you we have a um, first thing. Okay, first thing. Why am I gonna take this position right here? First thing, we are in an uptrend. So long position is our bias. Yes, and the current market that we have is in a correction mode, not in an impulse. So correction is where you should be doing your entry if you want to do momentum trading or trend trading. So with that correction, you have established some support, and then on that support, right at where you are, getting support, you are now having your bullish candlestick. Remember, you do not use candlestick just because you just see it. Yeah, it needs context, and this is your context. I literally wrote it down. All right, so now at this point you can enter the trade, you can prepare for a trade. So let's see what happened. By the way, the dot trade where I did a video and then I sent it to you guys to take some position, it was because of this also, candlestick. So at this point, okay, that is another big, supposedly that is a bearish, diba? But then invert that, that's gonna be a bullish now against a support. So now can you see we get the pump to the upside. Now at this point we cannot assume anything because we don't have any reference. We cannot just like say, oh, that's a spinning top, it's gonna reverse now. Oh, that's a bullish now. Again, this one is a spinning top also. There's no clear what do you call that, idea or informational backup in here, so we cannot touch that market. Your entry should have been down in here. It was your entry. Let me tell you. Any trades that you take in here is more of a FOMO. Remember FOMO? Fear of missing out. Now we get some proper rejection. Can you see? And a correction now. So if you want to trade this again, okay, do the same thing that we just did. Okay, some support. Okay, so we got some bounce. Okay, some retest. Ideally, you should be retesting or getting some entry around here because that's a good, yeah, you're seeing some bullish pin bar. Yeah, right here. So still we are in an uptrend position or uptrend market. Can you see higher high, higher low, higher high, higher low, higher high, higher low, higher high. Yes. And then another higher high from here. Okay, I guess this one is just a continue. No, that's a full different one because it did the correction and then it got the break right here. Yeah, so can you see what happened from a higher low? We do a lower high, a lower low, I mean. Yes, right around this area. So from this point, onward, okay, we are we have activated the downtrend. So now that we are in a downtrend, okay, do your context, we should be looking for a short position. So at this point, we can see some resistance in here, this area. Okay, let me clear that. Yeah, that's a resistance right there. So now we're gonna be looking for the possible lower high. And then can you see we're getting some rejection? Yeah, that's a spinning top. I want you to count, guys. Okay, how many pin bars in here? There's a spinning top right there. There's a pin bar. Okay, there's a pin bar. Now, can you see this? This one is a tweezer. What is this again? The tweezer. Um, what was the name for that? Just a moment, guys. Yeah, that's looks like a tweezer top. But then again, you don't have to memorize all of them. Just understand what is happening. If you combine the two, it's gonna look like a pin bar right here. And we can see that we are literally struggling right at this resistance. And at the same time, we are seeing the bearish candlesticks. So at this point, okay, spinning top, okay, now that's a clear rejection. You can take some short position from here. Now at this point, stop loss above there. You can take profit right at the previous support that you did. So now your trade looks like this. So yeah, can you guys see? So you just need context with candlesticks when you do your price action lesson. All right. So now the exercise that I want you to do not focus on taking a trade yet or anything like that. I want you to do this. How can I do? I guess I'll just send the candlestick chart. Okay, or you guys can look up online. There will be lots of online, but I want you to do this. I want you to be doing the exercising of training your eyes, wherein looking, okay, that one is a spinning top. All right. Oh, right here is a spinning top. Oh, there another one. Now I see some bullish pin bar right here. Okay, you can plot that in. All right, pin bar right there. Yeah. So that's it. I want you guys to be, you know, to be doing the exercise. Now, if you want a full lesson of this, it's available in my premium. If you want a full strategy with the candlestick. All right. So yeah, so that's it for this morning. You can see some people right here. Yeah. So we'll have the continuation tomorrow with our candlestick lesson. Okay. So have a good day, everyone. Thank you for being in here. And yeah, if you like this session, just hit like. And if you want to share this with your friends, your family who wants to learn trading, please do so. And if you have any question, okay, you can message me in my Instagram. All right, so have a good day, everyone. Bye bye. I'll see you tomorrow. All right, have a good Sunday. Bye bye.